In Learning Objective 4, we're going to take a look at the calculation and payment of taxation. For taxable income up to $100,000, we're going to use the tax tables, which are provided in Appendix D of your text. For taxable income higher than $100,000, that information is also provided in the text as well in Appendix F. But with respect to those tax tables in Appendix D, they're going to be grouped in increments of $1,000 per table. And then within each table, you're going to have line items, which are grouped at $50 ranges to where you can be able to precisely calculate what that tax is going to be. A tax filer must also have a qualified health insurance or qualify for an exemption. And if the tax filer doesn't do one of those two meet one of those two prongs, then they'd have to pay what is commonly referred to as penalty, but really is going to be the shared responsibility tax. The way that tax is calculated is going to be either the greater of 2.5% of household income greater than the tax return filing threshold. So for a single filer, that would be $12,000. For married filing jointly, with both parties under age 65, that would be 24,000. The other prong you look at is whether or not the number of adults and children in the household, and then $695 per adult, and then $347.50 per child, limited at $2,085 per household. So you calculate what that amount would be, and calculate what the 2.5% over the threshold would be, and then whichever amount is greater would be the tax that's levied. And then this is going to be reported on line 11 of Form 1040. So with the first concept check here, we have the taxpayers with taxable income under $100,000 must calculate their tax liability using the tax tables, and we know that's true. Referring to those tax tables, what is the tax liability of a married couple with taxable income of $93,262? So we would look on page D12 of the text, which is in Appendix D, and then find the amount between $93,250 and $93,300, and then slide over to married filing jointly, and we can see that the amount is listed as $12,400. The third concept check, we look at using the tax rate schedule in Table 1-2 to determine the tax liability to the nearest penny for that married couple with taxable income of $93,262. And we're going to see that would be $12,396.64, so pretty close to that $12,400. The fourth concept check lists that taxpayers who do not have a qualifying healthcare coverage must pay a shared responsibility payment of 2.5% of household income. And that's false. The payment is the greater of 2.5% or the flat dollar amount based on the number of family members, that being the number of adults and number of children up to that household threshold. So for tax payments, tax liability is generally paid throughout the year, so it's not paid on all at once on April 15, even though that's the filing deadline. Most employees will have withholdings from their paycheck, which is paid throughout the year, and then that is reported as an amount on that W-2. So low-income taxpayers may also be eligible for an earned income tax credit. Once these are taken into account, you'd look and see whether the total tax liability is going to be less than the number of payments that were taken over that period of year, or whether the tax liability is actually greater than the payments taken over the course of that year. So if the tax liability is less than what's paid through either those withholdings, or if the tax filer filed estimated taxes, for example, if the tax liability is lower than all those payments, then they would receive a refund of that difference. If tax liability is still greater than all those payments taken together, then the tax filer would still owe the IRS and have to make payment on the difference or settle up the difference. So concept check for tax payments. Says taxpayers pay all of their tax liability when they file their tax returns, and of course, because of the withholdings, we know this is typically false. Brett's tax liability is $15,759. His employer withheld $15,367 from his wages. When Brett files his tax return, will he be required to pay or will he get a refund? Well, we know that the amount withheld is less than his tax liability, so he's going to have to make a payment here. And then the amount he will have to pay is going to be that difference, the 392, to get up to the 15,759 that was the total liability. And it says an earned income tax credit will increase the amount of tax liability, and we know that that is false.